What is good, guys? In this lesson, I will be teaching fair value gaps. So I'm sure you've heard this word maybe a million times, considering it is probably one of the most commonly used ICT concepts and most well known. But anyways, let's get into it. So what is a fair value gap? You'll often see it abbreviated as FVG. And so a fair value gap is simply a 3-candle sequence where the wicks of candle 1 and 3 do not meet. That is crucial, and in between those 3 candles and candle 2, there's an imbalance in price which is created, and so that's going to be your fair value gap. And so the way I like to think about it is like a fair value gap acts as a magnet for price to draw towards, right? So before when fair value gaps get opened up, you can expect price to trade into them and then react off of it, right? And so price typically rejects these fair value gaps and delivers price in corresponding direction, as I said. So that means, like, if you have a bullish fair value gap, if price trades into that bullish fair value gap, you're expecting price to continue bullish, if respected, of course. And so what does that look like, right? So right here, you're going to have your bullish fair value gap, right? You don't see the fair value gap yet, right? But I do have marked out the candles. You have candle 1, candle 2, candle 3, right? There's a 3-candle sequence. So that checks off. And so do the wicks of candle 1 and 3 meet, right? Can you determine that for me? Do these wicks meet? This one and this one. Are they touching? No, they're not. There's actually a space between these 2 candles. And so that right there is what's going to create that bullish fair value gap, right? So this wick ends right here, right? And this wick ends right here. And so that space between those 2 wicks, between candles 1 and 3, is going to create that fair value gap. And so when we say, like, okay, did price tap into that fair value gap? Did price respect it? What we're implying is, did price trade into this level and then react off of it, right? And so typically when you open up a bullish fair value gap, you'll get price trading into it, and then you expect it to continue running higher, right? And now in the bearish sense, right, here we have bearish fair value gap. And so once again, same criteria, 3-candle sequence, right? Candles 1, candles 2, candles 3. Are the wicks of candles 1 and 3 touching? Are these wicks touching? No, that's right. That's right. Maybe that's wrong. Maybe you were wrong. I don't know. But yeah, they're not touching. And so that's going to create our bearish fair value gap, right? And so now we have a bearish fair value gap here, and we have a bullish fair value gap. And so just like with the bullish fair value gap, if price trades into this fair value gap, we're going to expect price to react and then continue lower, right? So once again, price trades into bullish fair value gap, respects, you're expecting bullish price action. Price trades into bearish fair value gap, respects, you're expecting bearish price action, right? And, you know, once again, it all takes is 3 candles to create these fair value gaps. And so let me show you what that looks like on a real chart. Oh wait, actually, before I get into that though, let me just specify what it looks like if these wicks aren't touching. And so if these wicks, are touching, right, like this, if the wicks are overlapping, then that fair value gap won't be created. There is now no longer any gap between these wicks, so we can't create a fair value gap, right? There's no gaps between these wicks. These wicks are overlapping over candle 2, and we can't draw a fair value gap from that, right? So there is no imbalance. That being said, this is, of course, now a gap. We have a gap there, and now we have a gap there again. So let's just mark it out one more time before I show you in real time. This is our bullish, and this is our bearish. So let's let's go ahead and take a look at what that looks like in real price. And so here I have just random charts pulled up, but take a look at this and tell me if you can identify the most recent fair value gap. I'll give you a second. Okay, let's get into it. So right off the bat, what I'm noticing is that we have this 3-candle sequence right here, right? We have candle 1 right here. Oops. We have candle 2, and we have candle 3, right? And so these 3 candles, what are we noticing? That there is a space between each of their wicks. So if this is candle 1 and this is candle 2 and this is candle 3 up here, right? 1, 2, 3. Then we can clearly see that the wick of candle 1 is not overlapping or touching the wick of candle 3. And so we create this space in candle 2, which acts as the fair value gap, right? And so this will be a bullish fair value gap. And so when price trades into this bullish fair value gap, we expect price to continue higher, okay? So let's see what happens here. Price taps the fair value gap, we react. Notice that instant rejection of the fair value gap. It's not always going to be like that, but it is a good sign that that fair value gap is being respected and price will most likely deliver higher. And we are also on the 15-minute chart here. So when you're looking at fair value gaps and trying to determine the probability and the power of one actually being respected, the higher the time frame, the more likely it is to be respected. Right? If you're just on the 1 minute, you can get caught up just marking out so many fair value gaps, and a lot of them might just be useless. But for the most part, they all do their job. And so notice here, price trades into that 15-minute fair value gap. We respect it, and we start getting some bullish price action, right? Eventually, we come back down, hit it one more time, which can happen as well, and once again, respect it. And when we say, did the fair value gap get respected? All we're simply saying is, did price trade into it? Did we get some sort of reaction? It looks like it's being respected. And yeah, I mean, notice how price starts delivering higher right after. See? And so that's really how a fair value gap acts. It acts as a magnet for price, right? There's an imbalance here that price needs to fill. And so price goes ahead and fills that fair value gap. Not all the way, but it taps it. It doesn't have to fill it all the way. And then we get that reaction. And so that's that. And this is a clear example of a bullish fair value gap. And of course, bullish price action immediately after tapping. And we get that delivery and that the respect of the fair value gap. Looking at a bearish sense, we can go ahead and see like maybe something like this. Here we have another fair value gap. This one is going to be a bearish one, and so we see here that we have a 3-candle sequence right here. We have candle 1, right? Let's mark it out again. Candle 1. It's going to be this little one right here. Candle 2. And then candle 3. And so what do we notice, once again, from these 3 candles, is that the wick of candle 3 and 1, right? So we have the wick right here, and we have the wick right here. And these wicks aren't touching, and we create this gap in candle 2. And so that's going to be our fair value gap, right? Since this is a bearish sequence, or just a bearish candle in general, we are going to have a bearish fair value gap. And so what do you notice, right? Look at this. Price delivers lower, we create that fair value gap, and then look at this. Price draws towards that fair value gap, right? It's almost like, it's literally like a magnet. And immediately after hitting it, wicks back down, sign of the fair value gap being respected, retest it one more time, and then boom, we get that strong delivery lower. And so you can use a tool sort of like, if you're still trying to get better at identifying them, maybe a tool like this indicator right here could help you, which is a fair value gap indicator, which will essentially mark them all out for you. It is good to have this at first when you're learning, just because, it's going to help you identify them more, and maybe you might be missing some in the beginning. But also know that having this indicator on can be a bit overwhelming. So try to be able to mark them out on your own is my recommendation, because you don't need to have every fair value gap marked out. But yeah, that pretty much wraps up this really quick lesson on fair value gaps, right? If we just skim through price action here, we can see price hits this fair value gap, respects it, delivers lower. And you'll see this just all the time, right? Price runs up to this fair value gap, respects it, delivers lower. We open up another one, price respects it, delivers lower, right? Fair value gap right here, price makes this fair value gap, Price hits it, respects it, delivers lower. And you'll see this on all time frames, right? We're on the 50-minute right now, but look at this. We can go on the hourly. Bang. Same thing. We open up this hourly bearish fair value gap. Price trades into it, respects it, delivers lower. And, you know, we can see this even in a bullish sense as well. All right, what happens here? Look at all these fair value gaps. Let's turn this off for 1 second. What happens here? Bullish price action, bullish sequence right here. We have, once again, let's do a final one. Candle 1 right here. We'll call it this bearish candle. It'll be candle 1. Candle 2. This candle right here. Candle 3. Right above, right here. And so we see that the wicks of candle 1 right here and the wicks of candle 3 are now touching, and now there is a gap, right? This is the end of this wick. This is the end of this wick. And so that creates that fair value gap. And so as you can see, price creates that fair value gap, price delivers lower into that fair value gap, respects it, delivers higher. So yeah, spend some time looking through the charts. You'll see that these levels, these fair value gaps, are always being respected. Not always, but a lot of the time they are. And it's good to be able to identify in the higher time frame, because that can help you with your bias. It can help you with your draw on liquidity, and just overall identifying, you know, which side is price respecting. Is price respecting the bullish ones or the bearish ones? And that sort of just helps you formulate a more idea of like the narrative of price. I always say that, you know, don't just grab one of these concepts and run with it. Right? Like, you need to understand that these ICT concepts are meant to be used together to create that high probability. And so, yeah, that pretty much wraps up this lesson on fair value gaps. Once again, if there's anything you can really take away from this, I would say just, you know, note that fair value gaps act as a magnet. Price will trade into them. Price will react from them. And it's a 3 candle sequence. Candles 1 and candles 3 wicks should not meet in order for this fair value gap to be created. And yeah, so that being said, thank you guys for watching this lesson on what is a fair value gap.